I'm more bullish. I still think, even after all of this stuff that's happened, people don't really know the limit, the absolute scarcity of 21 million coins, right? They just don't know. And all of these initiatives that are being put forth, they're trying to eat into this 21 million cap, of which maybe 4 million coins are lost. Maybe. What happens? Nobody knows. But something big will happen.
Bitcoin's real supply is much smaller than it seems. Although its total supply is capped at 21 million coins, a significant portion, estimated between 3 to 4 million, is believed to be lost forever due to forgotten private keys, destroyed hardware, and dormant wallets. A 2020 Chainalysis report even suggested that around 20% of all mined Bitcoin may be permanently unrecoverable. Despite this, the market continues to underestimate how truly scarce Bitcoin has become. Samson Mow, CEO of January 3rd and a key advocate for nation-state Bitcoin adoption, warns that this disconnect between perceived and actual supply could have major consequences. With demand surging, fueled by billions in institutional capital through U.S. spot Bitcoin ETFs and long-term holders controlling over 70% of supply, Bitcoin's liquidity is quickly drying up. Exchange balances continue to fall, meaning fewer coins are available for purchase as interest rises. According to Mow, when this supply crunch reaches a tipping point, Bitcoin's price won't climb slowly, it will skyrocket. The market may be sleepwalking into a breakout moment, and when it hits, it could catch everyone off guard.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
The thing you have to really understand is the composition of the hodlers of Bitcoin is totally different today than it was 5 years ago, right? Even a year ago, it's totally different. So the whole hodler of last resort is you, me, and Francesco in the past. Now it's ETFs, it's pension funds, right? You have to remember when IBIT launched, they launched at like $25, right? It's traded up to 60 or something like that. Would we see a drawdown to $12? Like, I don't think so, because that money is even slower moving than a hodler, right? Like, they probably need months to decide to sell, not like panic selling. We're going to sell tomorrow because it crashed. So the structural composition of the hodler is radically different today, and it will become even more radically different in the next year. So I think you have to factor that in when you're saying these things like, oh, it's just going to do the same thing as it did the last two cycles, because it's a very different world today. But if you go back like a week, they clarified the ruling, so banks can hold now. So everything is moving so quickly, and I think it's just going to keep going at this pace for the next year, right? People are looking for bearish news, right? So now people are like, anytime there's a little bit of a downturn, like a dip, people search actively for reasons to be bearish. And I think it's just, I call it bear market trauma. They can't see the light, and they're just like looking for the darkness. They're trying to find the darkness anywhere they can find it. But I saw something today that someone tweeted out that, last time inflation was high and there were tariffs, Bitcoin dropped a lot. So, people can believe what they're going to believe, but Bitcoin will just do what it's going to do. And in time, you see who is right and who is wrong. But I'm more bullish. I still think, even after all of this stuff that's happened, people don't really know the limit, the absolute scarcity of 21 million coins, right? They just don't know. And all of these initiatives that are being put forth, they're trying to eat into this 21 million cap, of which maybe 4 million coins are lost, maybe 5, who knows? And a lot of it is in long-term cold storage, and a lot of it won't sell at any price. So what happens? Nobody knows, but something big will happen. The God candle, 10K candles are normal now. I think we've had like 9 up and down, but people don't know. Like, I still see like haters on Twitter saying, "Where's your God candle?" I'm like, what do you mean, where's the God candle? Weren't you looking? Like, we went down 13K. Like you're not looking at the God candles. You can kind of see it coming, that like it's almost impossible to trade this market. I've had a lot of traders ping me and say, well, you can't trade this. Like, it's impossible to trade this. Yeah, because when the currency is dying, you get this kind of volatility, and it is very hard to trade that. A lot of people will stay on 0%, but they'll have indirect exposure. Like their pension fund will have bought Bitcoin, right? So whether you like it or not, Bitcoin is coming, and whether you accept it or not, it's still coming. Like it's just going to be in everything you have. Like if there are UST bills with Bitcoin in them, like the Bit bond, then it's just everywhere. It's ubiquitous at that point, and it's not about whether you want to put 1% in or not. You just have 1% exposure, and there's already precedent with this. A number of pension funds around the world have Bitcoin exposure in some form or fashion. Like the largest Korean pension fund, I think, has a MicroStrategy. So it's not direct; it's MicroStrategy, but MicroStrategy has a lot of Bitcoin. And this is just a trend that we're going to keep seeing. But it is that Overton window shift. It's becoming that Bitcoin is an acceptable thing to be talked about as a reserve asset, not just an investment vehicle, not something like a tech stock, but as a national reserve like gold. And I think that has a lot of market impact that has not yet been realized or felt.
Bitcoin's holder base has evolved dramatically. Just a few years ago, it was mostly retail investors, early adopters and passionate believers willing to ride out any storm. But that landscape has shifted. Today, the so-called holders of last resort include institutional heavyweights like ETFs, pension funds, and asset managers who operate with long-term horizons measured in quarters and years, not days. This change carries more weight than many realize. Unlike retail investors, institutional players don't panic during price swings. They're not glued to charts or reacting emotionally to market dip. Their decisions go through layers of risk assessments, board approvals, and strategic mandate. This approach has brought a new level of stability to Bitcoin's market, raising its floor and making its price cycles less predictable compared to the past. As Samson Mow highlights, Bitcoin is no longer the same asset it was in 2018 or even 2021. It's entering a new era, defined by slower, steadier hands, reduced liquidity, and significantly larger investors. And that shift changes everything.
We're in the final phase of this bull run. Let me guide you. We've launched DailyDoseCrypto Alpha, a free private Telegram group just for the DailyDoseCrypto family. Inside, I'll guide you through profit-taking strategies, real trading tactics, long-term crypto investing mindset. Only 500 spaces available, then it's closed. If you're serious about this bull run, click the private link to join now.
So with the establishment of the Bitcoin Reserve in any form factor, I think it's a signal that Bitcoin is here to stay, absolutely. And it is going to become a key part of national treasuries and national strategies. Everything that a country does is going to have to incorporate Bitcoin in some way. Now, I believe that we saw a shift already with the ETFs, which is BlackRock, effectively the largest asset manager on the planet, signaling that Bitcoin is a legitimate asset class. But the SBR is signaling that Bitcoin is a new form of reserve asset for major accumulation targets to be held as a strategic asset for countries. It's very interesting, I would say, that the US as a whole, the US government is kind of speed running the whole crypto journey. A lot of Bitcoiners went through the phase of doing shitcoins and then going to Bitcoin. And some go back to shitcoins, of course, either overtly or covertly. But this whole process of Trump launching the meme coin and then all the talk about a crypto reserve and everything leading up to basically what I say is the ideal case for us. It's everything we wanted. You have a strategic Bitcoin reserve on one side and a crypto stockpile on the other side, which is right now just all seized assets. So it's a very clear distinction that the reserve is quality. And I think that was the only way that they could have done it. I've done a lot of thinking about what would happen or what needs to happen to create a crypto reserve. And it comes down to creating a list of criteria that can be followed almost mathematically to define what goes into a crypto reserve. And there is no really good way to do it. The only way I thought that you can do that and not just pick Bitcoin is to define it as proof of reserve, work coins. So things like Bitcoin, Litecoin, etc., etc. And even then, you have to have certain thresholds. Like these things cannot be spun up instantly. They have to be dominant in their hash rate, in their hashing function, and they have to have been around for some time, and they have to, not be easily manipulatable. Otherwise, the whole thing can be gamed, right? If you just say crypto reserve is proof of work coins, then any proof of stake coin can suddenly bolt on a proof of work function that does absolutely nothing, and it can just be gamed a lot. So to do the crypto reserve would have been a difficult task, I think, to define the criteria. Otherwise, Ripple can be in, any meme coin can be in, and it just becomes a joke. So maybe the working group came to the same conclusion and they decided to do this split. But it is exactly what we wanted. That crypto is in one side, Bitcoin is in the other side, and I couldn't think of a better outcome than what we've got. The way that it's framed and phrased is also very tactical. Right now, the budget, deficit, interest payments, the economy, these are all top of mind subjects. So it would be irresponsible for them to say, we're going to go and buy a lot of Bitcoin. I mean, if you're a normie, it would look irresponsible. If you're a Bitcoiner, it is the natural thing to do. But you have to factor in that most of the world is still made up of normies. So you have to cater to their perception of what is normal and what is acceptable. So by just creating the reserve and saying we're moving seized assets in and we're going to stop selling, I think is the palatable thing for the masses, right? If you just said, we're going to make this and we're going to go buy a lot of Bitcoin, a lot of people would freak out, and you have the opposition that will use that to their advantage and attack. So this is kind of the way to dip the toes into the Bitcoin market. And as you're saying, they shall find budget neutral ways or revenue neutral ways to acquire Bitcoin, which actually gives them a very broad playing field to do, because there are so many different things you can do. You can make a Bitcoin bond. I think the guy that proposed it is calling them bit bonds for the US, but that is one way. You could use excess energy to mine Bitcoin. There's just a lot of things you can play with to create a budget neutral or revenue neutral stream of Bitcoin income. But yeah, like the act from Cynthia Lummis, the Bitcoin Act, I think that will be a more mainstream test of political palatability for buying Bitcoin actively, because that is what that bill is for. And that will go to Congress. There are already, I think, 6 senators signed up to support the bill. So we'll see if their constituents talk to them and say it's a good thing, and we see more senators come on board. But that's kind of the test to see if the market is ready, the US public is ready for a directed Bitcoin acquisition strategy.
The US government has just taken its first serious step toward embracing Bitcoin, and this time, it's more than just talk. By establishing a strategic Bitcoin reserve, they've effectively drawn a clear line between Bitcoin and the rest of the crypto space. No longer lumped in with meme coins and speculative projects, Bitcoin is being positioned as a distinct, strategic asset. Officials have been directed to explore budget-neutral ways to accumulate more Bitcoin, from sovereign mining and energy repurposing to innovative tools like bit bonds. What was once a far-fetched dream in crypto circles is now unfolding in real time, with intention and coordination. The US is moving fast, but carefully, aware that a sudden buying spree could jolt markets. Instead, they're laying the groundwork with quiet precision. As Samson Mow and others have pointed out, this isn't just policy, it's a national playbook in motion. It's no longer a matter of if the US will increase its Bitcoin holdings, but when and how openly they'll do it. Behind the cautious language and strategic planning is a nation preparing to anchor part of its financial future to Bitcoin. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.